Okay. So, so yeah, anything you see again that you think will be substantive, by all means, sign up for it. It ain't gonna kill you. You probably got a lot of nonsense coming into your email inbox anyway. So a little bit more ain't gonna kill you, especially when it might yield some information that could potentially make you some money. Um, Me personally, I get so many different emails and whatnot and different alerts on my phone outside of what's offered in the community. I very rarely feel like I'm out of a loop as it pertains to anything noteworthy in the market. So let's move forward and get into some other key sources of information. Okay, so I already made reference to barchart.com. I'm gonna just be honest. This right here is my bread and butter. Barchart is ice. I mean, it's such a robust website. You don't need to sign up for the paid subscription in order to access all kinds of information. I mean, you could research stocks, you could research ETFs, you could research different sectors, pretty much anything for free. As a matter of fact, just to give you an idea of what it looks like, here you go. Now, I'm not going to like go deep into the website, namely because on this very slide, you'll see when I go back to the PowerPoint presentation, I included a link to a due diligence guide that I created maybe about a month or so ago. So the link is right there. And in there, I include some screenshots and I actually identify some sections that I'm most prone to go to when I'm doing some quick DD on a given ticker. Um, Shout out to my boy Huey. I got Funko up. This is his baby, and it actually did a little work today. I didn't get in, but what are you gonna do? But yeah, this is what it looks like, just to give you an idea of how much information is actually at your disposal. As you can see, it's quite robust. You can also get levels here, like on the sniper scope calls. Anytime that I'm giving you levels on a ticker, I'm getting them from here. So when you get a chance, get familiar. um, as far as um, other sources, finviz.com is another really excellent source. I go to Finviz every morning before the trading session begins, namely for two reasons. One, I like the fact that what Finviz does is it pulls in the top news headlines from multiple sources that pertain to the markets. So, just to give you an idea of what it looks like, boom. And when you go to the news tab, that's it. All right, this is what you will see. So you notice you got links to different news stories from all different sources: Bloomberg, CNN, um, you know, BBC. And I'm gonna be honest, I just scan these. I'm not necessarily gonna go into uh each one. I go into the ones that catch my eye and make me feel like, oh, okay, I need to peruse that. And even when I go into it, I'm scanning. You know what I'm saying? Depending upon the article, I'm not saying it's not worthwhile to read through one all the way, but the reality is most of what you need, you can just scan. I'm looking for what's the bottom line that they saying about either the market or the tickers that are being mentioned, and what specific tickers are being mentioned. Other than that, overwhelmingly, I'm good. But this is just to give you an idea of what it looks like, how robust it is. But this is not the only area of the site that's icy. If you go here, actually, I want to go here. Now, I made reference to on one of these slides how we were going to touch on sector rotations, right? One of the best ways to look at the rotation of the sectors is why. Hold on. Boom, there we go. All right, this is another real cool thing about Finviz. It's gonna give you the a breakdown of how the different sectors performed over a variety of different time frames. So it'll give you a 1 day relative performance, and it'll tell you how tech did, how communication services did, real estate, energy, on and on. It'll give you how they performed for the week. It'll give you how they performed for the month and 3 months. So this is a valuable tool because, as we all know, or most of us should know, uh, the market is constantly changing. So, 1 week tech might be crushing it. The next week, energy might be crushing it. The week after that, financials might be crushing it. So we can't allow ourselves to get married to one specific sector and think, oh, I just trade these. We trade anything that prints. We don't care what sector it comes from. As long as you can make money off of it, that's where we going. Because in essence, if you want to get to the money, you got to follow the money. And then I also did want to go here to the maps link, because what this will show you is just a different view relative to how given sectors are performing. So we see a lot of green in tech because Microsoft printed, Apple did a little something, Nvidia did a little something. So this is just a different vantage point, a different like optical perspective to let you know how things are performing and what's green versus what's red. So I would suggest that every morning you check Finviz real quick just to get an idea of what the outlook is going into the session for not only the different sectors, but also to get an idea of what's the hot news and what tickers might actually be ready to blow in either direction. Back on pace here. Okay, briefing.com. This is another really dope website. Those upgrades and downgrades that you see Huey post in Discord in the morning, you can find those at briefing.com. And I'll show you what that looks like as well, because I do have it up, or at least I thought I had it up, but I'll pull it up. All right, boom, here you go. So you got a closing stock summary. Um, you got some little news links that you could tap into. And then, it'll give you like a little bit of a breakdown slash recap on kind of what took place in the market. Now, just me glancing at this, I can already see they talking about chips, because they talking about TSM and MU. So if you was following along in the live chat today, the chip sector ran and some people in the community got money. So this is a valuable resource that I actually look at every morning. I look at this and I look at Finviz every morning before the session. It'll give you stuff like this, notable movers, and it'll tell you what direction it moved in, whether it gapped up or gapped down. Now, in the mornings, what you'll see is there will actually be links. One of them will say gapping up or gapped up in pre-market, and then one of them will say gap down. So that'll kind of help you, get a clearer picture of what you can expect going into the forthcoming session. So briefing.com is money. Real quick, I also want to mention, although a lot of y'all probably saw this already. This PowerPoint is available to you. I posted it in the live chat, so you can grab it. So I'm saying that to say, don't feel hard pressed to be like jotting down notes or whatever, because this is yours to have. ETF.db. I made reference to this one earlier. This is where you can go to look up information on ETFs. So you got ARC-F right here. It gives you a breakdown of the general makeup of the fund. It gives you some more data over here. If you want to see the top holdings, you can come here. Boom, there you go. It'll give you the top 15. And, you know, most of us that are in the community already know about ETFs and what they are. For those who may not know, they are exchange traded funds. In layman's terms, all that means is it's a fund that is comprised of percentages of a group of different equities. So as you can see, it's broken down by percentage. So Square represents 10.09% of the assets in this ETF. PayPal represents 5.57 and so on. So the dope thing about ETFs is if you want to get coverage of multiple tickers within a given sector, then you could play an ETF as opposed to trying to play all of these different tickers as individual stocks. So ETF.db is, ETFDB.com, shall I say, is definitely an icy go-to if you want to do a little bit of quick research on an ETF that somebody put you up on or that you come across in your research. Right here is the link that I made reference to the due diligence guide that I created. I tested the link, so it should work. If by chance, when you go to access it in the PowerPoint, it doesn't work, it's also pinned at the top in Small Account Challenge, or you could just send me a message and I'll send it to you in your DMs. It's perfectly fine. Now, this statement right here is in all caps and in bold letters for a reason, because it's very real. Google and YouTube need to become your best friends. I know a lot of times people probably wonder when they ask questions about certain things, or like if somebody, if another one of the admins, like maybe Bailey might pop a ticker in the live chat because it came up on a scanner. And he'd be like, somebody give me some quick DD. And then maybe me or JR or MacD Mommy, boom, all of a sudden, immediately we start posting links. And you like, how the hell they do that fast? Well, it's because we accessed sources such as these. Sometimes we might have just did a Google search. For everybody that has tapped into the information that I've been putting out there about the Hull moving average and the Heiken Ashi candlestick style, all of that came from Google and YouTube. Shout out to my good brother Stock Daddy, because not too long ago, he was talking to himself over in the daily chat. And he said something, and he caught himself and he said, wait a minute, Jacob, stop asking Googleable questions. And I immediately called it out because that's poignant. What I mean by that is everybody on this call knows how to use Google, and everybody on this call know how to use YouTube. All y'all got smartphones. All of y'all know how to seek out information that is of interest to you. So keep it simple. Sometimes Google and YouTube, especially like when you're doing your weekend due diligence, you'll be surprised what you can unearth if you find a good rabbit hole and just see how deep it goes. So again, Google and YouTube need to become among your best friends for the purposes of finding information that you can leverage to play the market. Discord. Now, a lot of people who are not like ultra familiar with Discord in general, or who may not be very familiar with our community in Discord, our community is tremendously robust and it is laden with information throughout. Some of this is information that we actually add to it. Some of this is information that it's programmed to pull in. So it's important that you take some time when you have the time to learn how to utilize the tools therein. One of the primary tools is the options bot. Now, if you go into the options bot, you'll see at the top the commands associated with it are pinned to the top of the channel. So if you open that link, it'll literally give you all of the commands, and it'll tell you what those commands will return for you when you enter them in the options bot. One of the main ways in which we leverage this is to find out the open interest and volume for tickers when we're trying to figure out which strike we want to get into on a given play. So definitely take that time to get familiar with that. If you got questions, ask somebody. They'll be happy to tell you. This is a big one. Utilize the search bar in the Discord. You'll be surprised how powerful it is. If you pop in a ticker, if you pop in somebody's handle name, like if you're trying to find something that they posted, once you popped it into that search bar, it's going to literally pull up everything associated with whatever you put in. So you can just literally mine it and find what it is that you're looking for. People are constantly posting things, whether it be ebooks, documents, video links, website links, tweets, IG posts, you name it. People in this community are very diligent about seeking out information, and they not stingy with it. So just within the community itself, you'll be surprised how much information you can find. Now, right here, this is bolded and capitalized yet again, because I want to drive this point home. Ask unlimited questions. There is no glass ceiling on the number of questions you can ask. However, we prefer that you ask questions that are not lazy, meaning questions that suggest that you have attempted to find some information independently. You'll be surprised some of the nonsensical questions that we get in DMs. And I'm speaking for myself as well as the other admins and probably some of the other snipers in the community. People asking you stuff like, what can I play? What can you play? If you asking me, what can you play? That's letting me know that you're being lazy about the way you go about navigating the community. Why am I saying that? Because we got channels literally dedicated to plays. It's plays being called out and chopped up in live chat during the live trading session. We stay chopping up plays in small account challenge. So I'm not gonna be rude to you if you pose that question to me, but just be advised that if you ask me that, that's gonna let me know that you ain't really putting in work like that. You know what I'm saying? Trying to find out what viable plays there are, because there have been plays called out. I'm sorry. My bad. Let me mute that. So all I'm saying is do the best that you can to condition yourself to at least try to find the information that you're looking for. Now, don't break your neck. If you done a couple of searches, if you tried to find that and you can't find it, by all means, ask. Ain't nobody gonna bite your head off. But I'm saying if you wanna make it so that you develop at the most rapid possible rate, you wanna start conditioning yourself to practice good habits. And among those good habits is seeking out information independently. Even if you find some information and you're not sure how credible it is, post the link and be like, hey, I found this on such and such. I found this on YouTube. What y'all think? Or I found this via a Google search, or somebody tweeted this or sent this to me. Does this make sense? Or is this viable? Is this worth me implementing or paying attention to? Don't be shy about asking questions. Just don't be asking lazy questions. You know what I'm saying? I give everybody the benefit of the doubt that they're highly intelligent and efficacious individuals. So, man, you got something between your ears, use it. Now we're gonna touch on contracts. Now, this is a very vanilla slide because I didn't want to dump a whole lot of information about options contracts in here when we could just go straight to Thinkorswim and look at some. So I'm gonna go out on a limb and assume that most people on this call, at a minimum, know what a call is and what a put is. But we may have some brand new people who are completely green and don't know. So I'm gonna give it to you as simple as possible. When you playing options, essentially what you are doing is you are buying the right to control 100 shares of a given stock or ETF, an equity, if you will. So, for example, just to drive the point home, let's take a look at Thinkorswim. All right, here's everybody's good buddy SPY. So SPY is the S&P 500, and it's one of the most volatile and popular tickers that people are prone to play on a day-to-day basis. So what we're looking at right now, for those who don't know, is we are looking at the Thinkorswim platform by TD Ameritrade, which is the one that the majority of us use to trade. And specifically, we're looking at the options chain. So what you have is right here under strike, these represent the prices that by playing SPY, you are essentially betting or speculating that the stock will hit, whether it's going to rise up and hit that price on the call side, which is this side, or whether it's going to drop to one of these strike prices on the put side. If you're buying a call, you are essentially purchasing a number of contracts for a premium, the premium being the price. And that, however many contracts you purchase, you multiply that by 100, and that's how many shares of that equity you control. So a couple of things to pay attention to. Typically, the ask is the price that you're going to be paying to purchase the contract. The bid is the price that it's being sold for, and these figures fluctuate throughout the day. And I'm not going to get too deep into this stuff because it's covered in the course. So if you want to get real in depth into that, if you haven't already, definitely grab the course because, man, it got a lot of fire in it. But real high level. And you can customize this. So you can set this up to show whatever information you want. This is just the information that I like to see. So I want to see the ask, I want to see the bid, and then I want to see the delta and the theta. The delta is essentially a decimal value that converts to a percentage that represents the likelihood that this play will go in the money, meaning it will meet the strike price that you bought in at. So if you got into a 402 call, then essentially the delta is speaking to the likelihood that the price is going to go up from $400.61 to $402. The theta is the opposite. It's a decimal value that speaks to the likelihood that the contracts will expire with no value. So the delta and the theta fall under what are called the Greeks. Again, I ain't gonna get too deep into that. You can research that independently. There's a wealth of information out on the web that'll explain that to you in more detail. But in terms of what we look for when we're looking for viable contracts to play, the main two things that we're looking at, other than the premium, is these two. We're looking at volume, which is the number of contracts that were purchased on a given day at this strike, and we're looking at open interest. Open interest is the total number of people who are playing options at this strike price. So the volume will fluctuate because people are constantly coming in and out of given contracts. The open interest won't fluctuate as much. But the reason why we pay so much attention to these two numbers is because this is letting us know that a given play is liquid. By liquid, we mean it's easy to get into and get out of. So if you buy in at 402 on SPY, as you can see, it's a whole lot of people at that party. So if at some point it continues to run upward, when you're ready to get out and take profits, you ain't gonna have no problem immediately selling out of that position. Same thing over here on the put side. If you buy a put, and let's say you bought the 399 put, you get in, and then during the next session, it starts to dump, and the price is reducing. And let's say it dropped all the way down to like 396. If you bought in at 399, when you're getting ready to sell out and take profits, you ain't gonna have no problem getting out of that based on the number of people who are playing these strikes. Plenty of volume, plenty of open interest. So at a very high level, you're looking for sizable volume, sizable open interest. If you want some basic benchmarks, you typically want to make sure on the open interest side, you got at least 1,000 in open interest, and that's on the lower end. I would say 1,000 is not a bad benchmark for volume either, but sometimes because of the fact that the volume fluctuates, you don't necessarily lean on the volume as much, but you definitely don't want anything that's like really low. So if you want to give yourself a barometer, I'd say maybe 500 at a minimum for volume, depending on who you are. Another thing you want to pay attention to is the spread. The spread is the difference between the ask and the bid. And SPY is a great ticker to look at because typically the spreads are going to be tight. The reason why it's important to have a tight spread is because that also speaks to the liquidity of the ticker, meaning how easy it is to get into and out of a play. Because essentially what that's saying is there's not a wide disparity between what people are willing to buy for and what people are willing to sell for. So you generally want to have tight spreads. As a benchmark for that, most of us prefer a spread of 10 cents or lower. 15 is pushing it, but if you got a lot of volume and a lot of open interest, it's fine. But as much as possible, you really want to try and play strikes that have relatively tight spreads. That way you're liquid and you don't have a problem getting in or out of a given play. And again, there's a little bit more specificity outlined in the due diligence guide. And then also it's very easy to find more robust breakdowns of the anatomy of an options contract. I just wanted to give you an idea of kind of in a general sense what we look at. One more thing I'm going to say, this is not necessarily pertaining to SPY as much, namely because people do a lot of scalping on SPY. But we'll look at another ticker real quick to drive this point home. Let's look at GM, because GM been doing work lately. I definitely want to touch on time to expiration, because that's another one of the key things that we look at when we're looking at plays that we're considering. So on GM, let's say if we wanted to do a swing, and let's say we want to give ourselves at least 2 weeks to a month out. The value in that, okay, boom, this is jumping out at me right here. This is nice. So GM closed at 57.80 today. If you wanted to get into the $60 call, look at that. The ask is only 99 cents. That's very small account friendly. The bid is only 96 cents. So you got a 3-cent spread, nice and tight. Delta is 0.34, while your theta is only negative 0.05. That's decent as far as the disparity between the two. Look at all of that open interest. You got over 40,000 people holding positions at this strike, and 4,266 people got in that thing today. So if I was looking for a short swing, this is one that I would definitely have my eye on. The value in giving yourself more time until expiration is you give the play more time to develop. Um, I'm actually primarily a swing and leap trader. So I like to give myself time on my contracts. Uh, Generally, anywhere from on a swing, anywhere from a month to 3 to 6 months, and for a leap, anywhere from a year and beyond. Once again, because the more time you have, the more opportunities you'll have to capitalize on a move in the direction that you plan. If you're in a call, you getting that many more opportunities to catch it when it rips, and then if it rips, you can ride that upward move as far as you desire before you take profits. And the inverse would be the case on the put side. So I just wanted to mention the importance of giving yourself time on these plays, because everybody is not built to be a scalper. So, do yourself a favor, give yourself some time. So, at this point, we'll talk about questions. Um, Naturally, if you have any, you can feel free to pop them in the chat right now. If not, you can always post questions in chat, whether it be live chat, small account challenge, or questions for admins if it's something of more of a administrative nature, something going on with your access, like certain channels you can't get to, that sort of a thing. Also, ask your fellow snipers, man. If you cool with somebody, or if you cooler with somebody maybe than others, and you would feel more comfortable sending them a DM, send them one. Everybody in our community for the most part is very helpful. And we all have sort of you know, a all for one kind of mentality, so to speak. So don't be scared to leverage the knowledge of, your counterparts in the community. Okay, so we got a couple of questions. I'm gonna get to those in 1 second. Um, if you want to DM an admin, feel free. My DMs are open, but just be patient with me. I usually am pretty quick about responding, but let's be honest, I got a life. So if I don't get back to you immediately, it's not because I'm acting funny style, it's because I'm busy. But I'm very vigilant about responding to people when they pose questions and such. So by all means, you can definitely feel free to reach out to me directly if you desire. I'll get back to this in a second. Let's go ahead and address some of these questions. All
Yeah,
right,
you got
so
about 3 questions.
yeah, I see. I'm finna address those right now. So, as far as how do you customize the options chain? So, what you would do is you could go to here, you go right here, and then if you hit customize, this is how you can take things off or add different things. So if you wanted to add the percentage change, you click it, click add item, and then boom, it shows up right here. Then if you click OK, then it'll show up. If you want to remove it, click on it, click remove, then click OK, and it's gone. So me personally, I don't like to bog my options chain down with too much information, because I like it to be as clean as possible so that I can actually, I just want to see what it is I need to see. Now that's going to vary from person to person. So you can customize it as you see fit. If you're looking for some ideas relative to different ways that different people customize theirs, just ask them. Everybody got their own setup as far as what makes them most comfortable, and what they feel like gives them the optics that they need to see. So that's how you customize your options chain? How do you discern the chart from the news? All right, so let's do this. That's an excellent question. So we're gonna pull up GM since we already got it there. And right now, as you can see, I'm on Barchart. So the first thing that's jumping out at me is Barchart is rating this as a strong buy. So the question is, why? Another dope thing about Barchart is it'll give you the chart right here. Now, I prefer to do my charting on TOS, but if I just want to get a cursory glance of what's going on, as you can see, it's giving you multiple time frames. This right here is a 3-month chart, and you can see that it's pretty bullish, and it's following a relatively predictable pattern. It rallies, bases, rallies, bases, rallies, bases. Now it's gapped up just a little bit, and that's just on this time frame. Now, as far as the other information that we would look at, so you called out the news. Let's look at the news. You go here to news and headlines. Okay, here we go right here. Biden aims to juice EV sales, but would this plan work? Now, without even opening up the article, immediately that's going to make me say to myself, oh, okay, it's gapping up because of EV. Now, over time, the more that you research a given ticker, you'll be kind of aware of the different things going on with that ticker. So I already know that GM is going in hard for EV because I done played it before. So I already know how much money they've invested. So this right here just kind of speaks to that. You can scroll down and look at a couple of more other headlines. GM's first quarter US retail sales grow 19%. That's catalytic. That's letting you know that GM is healthy, at least from a sales perspective. Now, granted, if you wanted to dig in a little bit deeper, you could go into the article and see what it has to say about that. Keep coming down. This is all from today. Boom. California proposes electric vehicle standard for rideshare companies. Here's your theme, EV. So how would we translate that to what we see on the chart? All right, let's take a look. So we always want to start with a larger time frame and then work our way down into shorter time frames. All right, so this is the daily chart right here. Matter of fact, let me clean this up a little bit. I'm gonna take the TTM scalper off. All right. Okay. So if we're looking at this, and remember, this is a daily chart. Today being April 1st, we could start from right here because this is where we see the most recent reversal of sorts. Here's your basing candle. Here's your doji. Then boom, we instantly go on 3-8 from red to green. Now, 3-9, green. 3-10, green. 3-11, green. Green, green. Each one of these candles represents a day. So right here, this is letting you know that during this span of time, this was bullish. Now, the buying energy, it kind of weakened here on 316, but it didn't reverse, even though that was a doji. Next day, more green. Next day, even more green. And this candle does not have a bottom wick. So it opened higher, closed higher, and it hit a higher high. Now we get to this doji right here on 319. We see a little bit of a reversal. Now it goes red, 322, 323, 324, 325. But right here, we get the green doji. Sellers try to come back in, but the buyers are like, nope. Now look where we at right here. We at 330. So from 330, this is the last 3 trading days. 330, 331 was green. Today was green. So it wasn't like super green, but it was green nonetheless. And if we consider that the 3 headlines that we read all spoke to EV, we could consider that a bit of a catalyst as to why we got a reversal from seller control to buyer control. So just from a basic logic perspective, that's kind of how you translate what you see in the news to what you see on the chart. Briefly touch on the whole moving average. Okay. I don't want to get too deep into it, only because that constitutes technical analysis, and there is a plethora of information in the community on this. I know because I put it in there. So when you get a chance, feel free to dig through what's in Small Account Challenge and some of what's in live chat. But that being said, I will touch on it. So the whole moving average, actually, I have 2 loaded on my charts. One is the 7-day whole moving average. That's the solid line. The other one is the 11-day whole moving average, which is the dotted. Simply put, when it's bullish, the line is green. When it's bearish, the line is red. Now you might be asking, why do I have more than one moving average showing? Well, the reason being is because, and as a lot of us, especially people who are in the community will know, there's a lot of us experimenting with this moving average. And so different people have different preferences as far as what they like to see. I like the way that the 7 hugs the price action type, because I want to see what's going on immediately. And as you can see, the 7 is piercing right through the center of the price action, regardless of what direction it's going in. However, the value, shall I say, of having a second slower moving average is for confirmation. So like if I'm looking to get into something, I'm not going to get in just based off of the reversal showing on the 7. I'm going to wait until the 11 catches up and they both reverse, because that's further confirmation. Case in point, if you look at the 7 right here, it's hugging the price action so tight that immediately after this green doji, boom, it turns red. But that could theoretically be a false signal. Whereas the 11 doesn't actually turn red until this point, where the slope has already started to take shape and you already got at least one red candle. I'm not generally going to jump into a play on the first candle of the opposite color anyway. I need more confirmation. I might not get in until maybe this one, or maybe even this one, particularly if I was scalping. Now, this is a daily chart, so I'm not going to be basing a lot of plays from an entry standpoint strictly on this. But as far as the way that the whole moving average is informing me about the trend, I just like it because it's simple, man. I'm not a PhD level technical analyst. So what fascinated me about the whole moving average is that it's clean and it's simple. So Bailey has been labbing some other strategies with it, with larger time frames. Man, he nice like that. So if you want to mimic that, by all means, do that. Because if he implementing it, I guarantee you odds are he done figured out how to print off of it. For me, for the time being, this is what I like. And it's not static, it's fluid. I'm still tinkering with it, but that's just to give you an idea of the whole science with the whole moving average. I might as well speak on the Heiken Ashi candlesticks as well, since I'm running that. So to get to that, you would come here and under appearance, you would change the chart type to Heiken Ashi. Now, why do I like Heiken Ashi? Because of how smooth, from an optical standpoint, it depicts the price action. Um, Anybody that's accustomed to looking at charts will bear me witness that if you're using regular candlestick patterns, it's easy for you to get spooked out of a play because of the way that the candlesticks change colors instantaneously based on the way the price action is. I just personally like the way that the Heiken-Ashi candles um, maintain a given color and represent a given trend until a true reversal comes about. So for me, the combination, again, from an optics standpoint, of the Heiken-Ashi and the whole moving averages, it just creates a picture that's easy for my eyes to follow and interpret. Let's see. When buying on Thinkorswim, do you buy on the ask or create your own price below the ask? It's up to you. It's advisable to bid lower than the ask if you desire, particularly if you use an active trader, because you want to. I see you, Teo. I'm gonna get to that in 1 second, bro. I mean, it's advisable to try to get in as cheap as you possibly can. I personally, for the most part, I do limit buys. I know other people will bid like lower than the ask or whatever. So the simple answer is whatever works for you. You know what I'm saying? But your logic is sound in that certainly you want to try to get the most for the least. So if you can get in for a cheaper premium by bidding a little bit lower than the ask, hey, if you can get filled, more power to you. You know what I'm saying? So really that's up to you. And that's something that you would have to kind of, play around with to see what works for you. Let's see. Can you hit the style menu next to drawing tools to switch? Oh, yes, definitely. You can do that. Good call, my brother. This is another way that you can go about changing the candlestick style. So from here, you can go like right there, and then boom. You can change the candle trend, bars, whatever. So, man, I'm glad you called that out. It's definitely more than one way to skin a cat. So you can either go here to style, or you can hit this gear icon and go into the chart settings. So either way, you know what I'm saying? Whatever works for you. Let me real quick jump back into the PowerPoint and just say this. If by chance you are a person who feels like you need
Real
or want,
quick, sorry, I don't know if you my bad cutting you off, but did you answer Marlena's question in terms of buying on TOS?
yeah, I just talked about it.
Okay, cool.
Yeah, I just talked about because she was asking about, do you buy on the ask or create your own price below the ask? So I was just saying, yeah, you could definitely do that. You know what I'm saying? As a matter of fact, as long as you can get filled, it's advisable because we always trying to get the most for the least. At a minimum, it's advisable to do a limit buy. That being said, I'll add this for people who play spy. Sometimes man, just so you could hurry up and get in or get out, you could buy at the market because that thing be moving at warp speed, and you're not gonna fall victim to as much slippage because typically the spreads are real tight. Um, so that's that. So what I was saying was, if you're a person who feels like you need or want more direct one-on-one help, whether it be with due diligence, getting acclimated to the community, figuring out how to navigate the different channels and keeping up with the pace, um, trust me, I understand that it can be a little bit overwhelming when you first join, especially during the trading session when the live chat blinking at warp speed. You got admins on voice calling out plays and whatnot. It takes a little while to get acclimated. So I respect that. I can appreciate it. I went through it. If you want help with trading psychology and maintaining your sanity amidst the chaos that is being a trader, if you need a pep talk or if you need to get cussed out, hey, Some people respond to different types of feedback, but all of the above represent things that fall in my wheelhouse. So, man, if you want to, you can absolutely book a one-on-one session with me, and I will help you in any way that I can. Um, I don't hoard information. People in the community will bear me witness on that. What's mine is yours. I'll give you whatever I think will help you get money. And anything that I don't know, I'll find out or I'll point you to once I can identify a direction that'll lead you to it. So I just wanted to make that known that I'm available for a one-on-one consultation for all of the above. And as many of you know, if you want to get down and dirty with the technical analysis and stuff like that, learn how to scout, your man Algo Bailey, man, he got you. Jay Tessie, got you. Wasi, got you. Hell, JR, he can hold you down. Huey can hold you down. So we all have different strengths as far as skill sets. Look, I know where my bread is buttered. I'm a functional technical analyst, but I'm not nowhere near the GOAT. My bread is buttered in what we talking about. Due diligence, just kind of helping people make their way through, maintaining a level head, and that sort of a thing. So, I just want to let y'all know if you want to tap into that, it's available to you. Um, Anybody else got any more questions before we shut this thing down so y'all can enjoy the rest of your evening?
Preem,
Yes, sir.
can you go back to your Think or Swim setup?
Mm-hmm.
Just have 2 questions.
Fire away.
All right, first question. With the RSI, right? Like the RSI is like a lagging indicator, right?
Yep.
So, but the HMAs are more like a leading indicator, right?
Yeah, depending on what you got them set to.
Okay.
But yes, you're right.
And
And let me just say this. Honestly, bro, most indicators are lagging to a degree.
Right.
TTM squeeze lags also. So I just want to put that out there. And you probably know that already, but just for other people who are getting acclimated, understand they track things like momentum, but they not fast enough to keep up with the real-time price action. So go ahead.
My other question is with that on your watch list, where you got the bull bear indicators over there,
Mm-hmm.
like on what time frame is that based off? Is that based off real time or is that a particular time frame?
So here's the thing. I believe, and there's some, and the information as far as like where I actually found this is in Small Account Challenge. So you can reverse engineer your way back to it because it was a video that I peeled it out of. I believe that it speaks to, matter of fact, let's do this real quick. Because I think it's based on like the last candle of the session.
Okay.
I believe.
Okay.
Now I do know that like a lot of those think scripts that I put out there, they're preset at like a default speed, like 20. Alan Hall himself in another video that I posted in live chat, he advocates the 21. So I don't want to give you a misquote. But if I had to venture a guess, I think that it is usually pointing to the last candle that registered. And if I had to venture a guess as far as the time that it's associated with, I think it's based on like the 20 hub moving average, but I'm not positive. When I get a chance, I'll dig into it because I should be able to find that out. But this kind of, man, I went down a deep rabbit hole like to get this, and I was following like a back and forth conversation in a forum, so I kind of was piecing stuff together. But if I find it before you, I will definitely put it out there, bro. That's a damn good question, actually.
All right, cool. Thanks. Appreciate
Yeah,
that.
it's like you start searching and you get into a rabbit hole. Next thing you know, 5, 6, 7 hours under one discussion. But then
Bro, I was so deep into, because I'm trying to, you know how that go. Like when you tracking a discussion in a forum, you might have to go 3 answers up to get one piece, and then come 3 or 4 back to piece the whole thing together. And then they may not post just a straight up link for the think script. So you might have to peel the script out and then, you know what I mean, hook your own
yeah,
script up. So that's how that was. So for the watch list, that's, man, Golden State Bull, that's basically the same thing that Teo was just asking about. If I'm, matter of fact, let's see something real quick. Cause see, I don't know if it'll let us dig into the guts of this, but we're gonna find out though.
Yeah, I tried this and I couldn't even, like, I tried to delete it. I tried to open it up, like the editor, but I don't know if you can, I didn't know how to open it up on this particular screen. I figured it out.
That's what I'm saying. Cause I tried to do the same thing. So see, all it's gonna give you is the script, but it ain't gonna give you like that settings window where you could tweak it like the way you could with like a study or whatever. But that being said, I can reverse engineer my way back to where I found it. And then once I can get to there, I should be able to figure it out. So let me do some digging on that. I'll do the best I can to try to figure it out this weekend. And then once I do, I'll post it.
wait, wait to change like the whole moving average numbers.
No. They not talking about on the chart. They talking about over here,
The
where
watch list.
yeah, in the watch list where it tells you whether or not something is bullish or bearish. And I don't know like specifically what time frame it's basing that on, but what I can tell you is it's a decent indicator as it's set now, just to give you an idea of what's going on.
It's within the script. So when they're writing the code, you have to write it within the parentheses. I mean, you do have to go more in depth throughout the script. So sometimes they have like daily, and sometimes they have it in parentheses. So once you go back to,
Let's see if we can find it real quick, because I popped out of that too quick.
Like, I know that that's all like Python code. So it's like you got to find the line. You got to find the line.
you got to find that specific line.
If you scroll down,
There it is.
There
Input
right
length.
there. It's the
Yeah,
Input
right
length is
there.
20.
Yeah, remember? That's what I said. I told you it was probably 20 because when I was watching those videos by old boy from TDA, he was pretty much saying that they when they do their think scripts, they kind of use a standard 20. So it's 20 based on the closing price within 1 bar. So I'm guessing that means like within 1 candlestick.
okay.
So,
Thank you.
but that's a real good question, bro. Because trust me, I was trying to figure that shit out too. And I was looking at like, I kept looking at different tickers, and I'm like, okay, it on a lot of them, it will be the last candle, but then some of them it might be the second to last, or you know what I'm saying. So I was trying to nail that down too. So that's a real good question. And man, I encourage everybody to continue looking at different ways to leverage this, because it's 1,000 different ways to skin a cat, man. But for me, if nothing else, I'm just a real big fan of the optics of it. Like, it's just clean. I ain't got to be looking at 1,000 things while I'm trading. The only other thing that I'll have up is like I was scalping SPY. I'll have the TTM scalper up, like actually on the chart, and then I might pop a supply and demand. But other than that, man, I don't want to see all that other stuff. You know what I'm saying? I got my TTM squeeze. I got my ultimate volume. That's all I need. And I got the RSI. That's enough for me to have a clear, clean picture, you know? So yeah, that's where we are as far as that. And apparently we got some people that's more nice with code than me. I see you, Golden State. Man, put that in Discord, bro. And man, play around with it. And if if you find a way to freak it that works better, man, throw that thing script out there. You know what I'm saying?
Send me that thing script. I'm gonna mess around with it.
Okay, no doubt. I'll DM it to you. It's in the small account challenge, but I ain't gonna front. I've dumped so much stuff about Hull moving average in there. I ain't gonna make you try to dig back through it. But now I got you, bro, because man, some of y'all might be able to tweak it and get it, that much more tighter and that much more tight and functional for everybody. You know what I'm saying?
Like it just calls an actual function, and you just input the values. That's what it looks like it does.
You talking about right there in that script that we was looking at?
Yeah, because it looks like because whole moving averages comes with Thinkorswim by default.
Right.
So all you do is just input the values. So that's how we customize it.
I ain't talking about on the chart. Yeah, you could tweak that on the chart with ease. We talking about this. It's two separate scripts. So the one, it's the same script, but you can like this one over here for the watch list. You can actually load this specific script. You can load this onto your chart, and you can load it on your watch list. But as far as just adding the whole moving average itself, you're right, Kurt. That is built into Thinkorswim. So yeah, you ain't gotta add you can just go in the edits, go into studies and just add it, and then you can adjust it like you can any other study. So I just want to make that clear. We literally talking about two different scripts. So you know what I'm saying? Because I don't got this script for the watch list. I don't got it loaded on my chart, but you can load it on the chart, and then what you would get is right next to right here where it gives you the stage associated with the market pulse, it'll say bear or bull. But I wasn't really a big fan of that. And plus, since I didn't know how to manipulate the script, I was like, man, I'll leave that part alone, because what I was primarily interested in was this piece over here on the watch list.
Sounds good. Yeah. Thank you.
No doubt. But yeah, so for anybody who isn't already messing with the whole moving average itself, you ain't gotta do nothing jazzy except go to studies, go to edit studies, and you can type it right in, and it's preloaded, like he was saying. Boom, whole moving average. And once you put it over here, you click the gear icon, and then boom, you can get in here and you can customize it. So you could change the speed here. You could change the colors. You can make it a solid line or a dotted line. You know what I'm saying? However you want to have it appear, you can tweak all of that in there. I just like to keep it simple for myself. I like the green and red because it's synchronous with the colors of the candlesticks. And it was easy for me to differentiate between the two that I'm using by just keeping the 7 solid and making the 11 dotted. Any more questions? Going once, going twice. Okay. Man, I really appreciate everybody for joining. I enjoyed this a lot. I sincerely hope you got value out of it. If you got any further questions relative to the discussion, do not be shy. Pop them in the Discord. Last thing I want to say for anybody who is not currently part of the community, you'll be doing yourself a huge favor if you join us. If you know somebody who's part of the community, which I'm sure you do, because that's how you got here, ask them if we don't get money. They'll tell you. You know what I'm saying? They wouldn't be investing in the membership if they weren't getting value out of it and they wasn't printing. So, like I said, the more the merrier. I appreciate y'all. I love y'all, and I will see you on the next one. Peace.
Appreciate this, Vin.
Appreciate you, bro.